Hello traders, Gary Wagner here. Approximately 12 noon in Honolulu, 6 o'clock in New York City. It is the 22nd day of May, Tuesday, and this is the Daily Report for Gold and Silver. Under significant pressure today, we have our markets lower, $24 lower in gold. Current print in the cash market, 1566.31, as you can see on the screen. 1560.60 is the low, 1592 is the high. In silver, off about 27 cents. As you can see, current print on the screen is 28.07 with a low of 27.88 and a high of 28.93. Of course, they're all flocking to the dollar, and it's really dollar driven right now as we await a meeting in Brussels tomorrow, which will talk about and try to make some sense and progress in the current European Union debt crisis, specifically Greece, and specifically whether or not we're going to see them exit the European Union. Now, that has really changed over these last couple of months in that where we would have expected to see some sort of, call it safe haven buying, we're getting a huge flock to the dollar index. We're currently looking at a 440-minute chart, which means in essence that it is a daily chart. And traders, here's what we want to look at. Right now we are without a doubt in a really critical area. And what I'm looking at is really this double bottom right in here, just above 15.20 per ounce. If that cannot hold, it's very significant, and I fear this market's going to go lower. Where? Well, our calculations are around 1466, and that's based upon a 38%, retracement, Fibonacci retracement. Now, when we look at our dailies, we've had a big turnaround since the other day, and that we are really at this point into significant pressure, and on our daily charts right now actually have a sell signal. It's a confirmation of a dark cloud cover in terms of the candlesticks itself. We are long this market roughly $20 from here, call it that, 1688, 1667, $21. My position is going to be if we see any kind of pressure in this marketplace, we will exit the trade, we will take the loss, and we will look to either sideline or, on the other hand, initiate a short position. There is certainly a lot in the marketplace that is increasing the volatility, and I want to make sure that if we are incorrect about our basic assumptions right now and where we think the market's going, that we can do so with a minimal of risk and a minimum of loss. Traders, we are looking at a Heikin Ashi chart. It's half-day candle, so 720 minutes per. And there's a couple of things that we want to point out here. Here we can see I'm going to go from the end of the body on this and draw that over. You can see the critical point. It's just above 1540. That's the critical area. I believe it's got to hold. I'm going to disregard some of the lows. This is a accurate low, 1520. This is that intraday low right in here. And my sentiment is if it can't hold this basic area, which is 1540 and above, my sentiment is it's probably going to break through and could, in fact, break hard and break lower. But there's another possibility, and that is as this dollar gains strength, if it really gets bad, over in the European Union in terms of the debt crisis, Greece leaving, I believe that following the strong dollar is going to be some movement in terms of fresh safe haven buying. Now, as far as silver goes, you can see that, first of all, we're looking at a daily chart. This is cash silver. It's significant pressure. I'm going to convert it before the end into a standard candlestick chart. But traders, what I'm looking at is this. My belief right now is that $28 is a pretty critical level. We've had a low just below that. As you can see, there's 28, and we had that 27.88 tick. If we can't hold really above this particular area, just as in gold, because I think it's going to follow it, we're going to have significant pressure. We'll want to exit the trade. I will be monitoring the markets throughout the day. I will send out any special notification as needed. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.